After 3 days of selling, the chip complex just staged one of its sharpest reversals of the year. Micron surged 18%. SanDisk jumped 26%. Lam Research added 18% on top of Tuesday's earnings beat. AMD climbed 13%. Western Digital, Lumentum, Marvell, Seagate, and Arista all posted double-digit gains. This wasn't one stock. It was the entire data center supply chain snapping back at once. The catalyst? Samsung reported record chip profits overnight and warned the memory shortage could stay severe all the way through 2028, echoing what SK Hynix said back on July 21st. Microsoft and Meta executives added upbeat commentary on AI compute demand. Put together, the market decided this week's China competition fear was overblown, and the underlying shortage story is still very much intact. Not everything moved together. Vertiv only edged up about 2%, still digesting Wednesday's 17% post-earnings drop, even though the numbers were solid and guidance was raised for a third time this year. Elsewhere, the Apple-China memory story escalated. A bipartisan pair of senators sent Apple a letter demanding it commit, by August 21st, to never use Chinese CXMT or YMTC memory chips in any product, even phones sold only in China. This comes days after Micron itself lobbied the White House to reject Apple's request. Political pressure is building against the Chinese memory competitors, and SpaceX landed a new $1.6 billion Space Force contract for 18 Falcon 9 launches through 2027. Solid fundamentals, even as the stock stayed roughly flat ahead of its first earnings report as a public company. What could today's stock activity mean for the build-out of data center suppliers? A rally this broad, on a catalyst about supply, not demand, could suggest the market still sees this shortage as structural rather than a bubble. The past week's volatility may say more about investor nerves than about the build-out itself.